welcome to Indicators Trader Derif. Today I'll be showing you how to use a stochastic oscillator combined with the EMA10 and a little bit of price action. And if you have not yet subscribed to this YouTube channel, please do well to subscribe and hit the like button, because I'll be doing a giveaway for my YouTube subscribers, so you could be one of the winners. Let's go. Before I hop into what we have today, I'll be showing you the indicator settings, which are the moving averages, moving average 10. You can see that 350 exponential. I've already done all this on my last videos. This is it, 90 exponential. I've explained how these indicators work, and this is stochastic. Should be the default settings, and your level should be this. These are your levels: 20, 80, 90, 50. Just screenshot and put these settings, and your screen should be looking like this. Now, before we head in, as a trader, what we want to do in a trade, you have to identify the trend of the market. Identify the trend of the market, you have to do it on the higher time frame, which are the daily time frame of the market. The daily time frame. Now, the daily time frame will tell you what you should be trading. On my last video, I said the market has to be above the moving averages, which are the 90, 250, and the 10. But here you have to identify the key zones of the market. This is what many traders fail to do. This is the price action you have to apply on your trading. You have to identify your support and resistance, support level where the market refused to break several times. Also the resistance as well. Now, let's say we are trading the current market right here. What do I want to do? I want to identify which state or which is the current zone the market is right now. You can see right there, and what is making this market to react is about to sell. What is that? You have to identify the key levels of the resistance or the support level. Right here we have the resistance level, which are these levels right here. These are the levels. These are the levels you have to see. Now I've identified that level as resistance level. What do I want to do? I want to place my tool, which is this horizontal line right here. This horizontal line I want to identify. This is it. Now, what do I want to do? I want to look at what the market is giving me. Watch the candles the market is producing, which is the bearish candle. You have to look at it. Now, let's say I want to take this trade after the formation of this bearish candle here. After the formation of that bearish candle, let's put a box after the formation so you could see what I'm trying to say. Let's say I want to take the trade because the market is about to say. Now I head back down to the 5 minutes time frame, which is this. Now this is the 5 minutes time frame of where the market have been reacting. This is the exact zone of the market. This is the exact zone. What do I want to see? I want to see market below the 350, which is this pink indicator here. These are the indicator. This pink one especially, I want to see the market below that zone. Now, after seeing the market below that zone, what do I want to watch out for at the stochastic oscillator? I want to see the market at the 90 for a sell. If it's for a buy, I will see the market at 10 or 20. I want to see the market, especially the 90 and the 10. That is where I always take my trade. At 10, I want to see the market reacting. That means stochastic crossing over each other at that 90 level. Now, the next thing I want to see the market reacting as well with the EMA10, which is this. I want to see the market reacting below this. This is where I take my trade, placing my stop loss above. That is what I will do. And target 1:2 or 1:3 or 4, depending on my risk appetite and what I love. Now, I want to still do the same thing at this zone. That is what I want to do. Where is the stochastic? Right now, you can see that the market is not at the stochastic level right now. This is it. So you see this one here. Please do not take your trade. Do not take your trade because the market is not at the stochastic. You can see that the market is not at the stochastic. I won't do that. Some people want to trade divergence, but I don't trade divergence. This is a simple indicator strategy. If you don't understand this at the moment, I don't think you're going to understand anything with the IBS strategy, because I've simplified this strategy using the stochastic oscillator. Now you have to look for other entries as well. This is another entry. You can see it here. This is another entry. This is a crossover. Placing your stop loss above that high there. Target 1:2 or 1:3. If I was trading this, at this current market, because it's a current market. This is a current market. This is what is happening. So I'll be looking for the same thing, often and often. You can see this is a ranging market. If I've done this, if I've seen this earlier, this is what I'll be doing. I'll just be taking the market right from that zone. But if I see the market ranging in this form, I usually allow the market to go until I see a break using price action. I see a break market going down here. This is when I will start taking entries again. Now let's head to other pairs. Let's go to jump 75. I saw something here as well. On the daily time frame, I want to see the market at a particular zone. Now this is the market at a particular zone, because you can see this was a resistant level at that box there. This was a resistant level. So the market returned back to that zone. Then from here, I've seen a bearish candle formation at that zone. This is where I'll start looking for a sell. This is where I'll start looking for sell from that zone. So let's put a box so you could see what the market is doing from that zone of reaction. This is where I'll be looking for a sell. Now let's head back to the 5 minutes. Let's look for it so you could see. We're waiting for the market to cross. This was where the market crossed below that, and that was a sell from this zone. That was a sell from here, placing your stop loss above. But if you are targeting 1:2, should be hitting the profit, should be hitting your target right there. Now let's go here. You can see as well another one happening, stochastic as well. Remember your stochastic. This is it, placing your stop loss above. You hit your profit, take profit. You can see that happening all the time. This is happening all the time. This happens all the time. You just have to know the market, the zone at which the market is at the higher time frame, and the reaction the market is giving. That is how I take my trade, using the IBS strategy combined with the stochastic oscillator. You can also see it at the higher time frame, that the market was reacting at the higher time frame. This is where you also confirm that this market is going to sell for a very long time. So that is how I take my trade, using the IBS combined with the stochastic oscillator. Please do well to subscribe to this YouTube channel if you have not yet subscribed, because I'll be bringing more of these strategies and more of how to take your trade using other indicator strategies. I'll be coming up with also the Bollinger Band entry. So thanks for watching.